Hello everyone. This is the pre-market report video for January 2nd, 2023 in terms of Nifty and Bank Nifty. Last Friday, Reuters released a statement that money market participants were seeing 65% chance that Fed will increase the interest rate by another 25 basis points in the next upcoming February meet. Money market participants means all the people and organizations who do business in financial market. I mean from banks and investment firms, etc. So basically, Rogers conducted the survey and released the results. In their statement, they also mentioned that they are seeing the interest rate will peak at 4.97%, which means roughly another 75 basis points from the present funds rate. Because of this, all three US major index throughout the day was under severe pressure, but in the end, in the last 1 hour, it regained most of it. At the end of last Friday, Dow Jones decreased by 0.22%, S&P 500 down by 0.25% and Nasdaq was down by 0.11%. This uncertainty also increased the 10-year Treasury bond yield by over 1%. Regarding oil, 30 economists forecasted the oil in 2023 to be around $89.73 per barrel. This forecast was sharply lower by 4.6% compared to November survey. But investors expect more worse numbers due to the recession fears no demand, which made the crude oil price to increase over 2.5% on last Friday. Brent crude oil was closed at $86 per barrel and WTI crude oil was closed at $80.51 per barrel. Then regarding Indian areas in US, it closed mixed. ICICI Bank and Infosys decreased around 1%, whereas Wipro and HDFC closed positive. About SGX Nifty on Saturday morning, it closed at 18,145 with roughly 80 points lower compared to that of the value when the spot market closed on Friday. But I think it just erased the premium. So I'm expecting and it's kind of indicating the flat opening rather than the gap down. Again, I may be wrong as well. So this is what happened on last Friday and Saturday in global market. Then regarding India related info, there were various important macros that were released during the weekend, including Friday after market hours, such as 8 core industries growth rate, bi-weekly banks credit and deposits growth rate, GST collection and unemployment rate. I know it's a lot of data, but I personally think it's important to know how country's economy is doing as a whole. So let's start. I'll try to be quick and precise. First, 8 core industries growth rate. Regarding the government press release, I'll provide the link in the description below. If anyone fancy, have a look. Now coming to the topic, as a whole, 8 core industries increased by 5.4%. But if you look at it as an individual sector, we can understand which stock price it may affect. If required, please pause it. First, I like to highlight the cement sector. In the December month, it increased over 28%. So I think it's very positive for cement stocks. Then steel, power and coal increased over 10%, which will be very positive for metal stocks, Coal India and power generation stocks. On the downside, it's just oil related. Again, last Friday, oil price increased by over 3% and in this year so far as an average, it increased by over 10%. So I think the oil stock has to be weighted between those fundamentals. But from this press release, it's clearly not growing both in December and as well as in throughout this financial year so far. Then regarding coal, there is a government release that Coal India's output will be over 760 million tons, which is 40 million tons higher than that of the last week's their CEO's projection. Again, government expected to reach near 1000 million tons in the next coming financial year. All these are really very positive for Coal India stock. Then the next positive country level macro is regarding GST collection. Again on December month, Indian government collected over 15% compared to that of the last December's collection. This is 10th month in a row that GST collected over 1.4 lakh crore rupees. So it's good, at least we got one less worry since already we got very bad current account. Now, if it is a low GST collection, then it will create a twin deficit problem. Then coming to banks, regarding credit growth, it again increased by 17.4%, which is really a very good number, so it's positive. But deposit was grown only by 9.4%, which is not good. Now at present it's kind of neck to neck since RBI is doing the money supply M0 of around 9% and banks got the deposit of 9.5%. So together it's 18.5%. In that they are lending 17.4%. So as I said, at present it's very neck to neck. This neck-to-neck credit lending, it's not allowing RBI to reduce the money supply which they want to do, so they can increase the rupee strength. That's the reason on last Thursday, RBI governor requested banks to raise external funds so RBI can cut the money supply. Anyway, but this lending growth rate for banking stocks, it's very positive. Then the final one I want to discuss is regarding auto sales. Maruti sales in December is declined by 9%. However, Tata Motor sales increased by 10%. So I guess as a sector it's mixed but positive for Tata Motors and negative for Maruti. As a summary, global momentum is not good, but 2022 US financial year was over on last Friday, so we can expect some new funds incoming to specific stocks this week. Anyway, it doesn't matter for today since I expect very less participation from FII as most of the countries, I mean almost all the Western countries are in holiday. Coming back to market, at present banking looks positive and I expect IT to be positive because of the earnings expectation and SGX Nifty was indicating a flat opening. Now coming to technical, in daily chart if you see the last 2 days, both Nifty and Bank Nifty forms a bearish dark cloud cover formation. This pattern indicates the resumption of downside and indicating more weakness going ahead. However, Nifty took the support at 18,100. I mean, in the last 4 straight sessions, 18,100 was defended every time and also the broader markets performed better. So today if Nifty moved towards 18,200, then the Friday's formation may be a false signal, then Nifty can go upwards to 18,350 levels. If it failed to sustain 18,000 mark, then sure there is no bullishness. Then about the summary of moving averages, for Nifty, it again downgraded to sell from buy since it broke the 5 and 10 day moving averages. Only 100 and 200 moving averages are not broken yet. About indicators, most of them turns to sell now, so it's a strong sell signal. Even RSI value for Nifty is dropped to 44, so it's also a marginal sell now. But for Bank Nifty, it's very better compared to Nifty as 11 out of 12 moving averages are indicating buy signal. So as a moving average summary, it's same as last Friday, it's a strong buy. Even in case of technical indicator summary, same as last Friday, it's just buy signal, not strong buy. However, RSI turns neutral from buy as its value dropped to 51.5. From option change in open interest, there was a huge number of new call options added at above 18,200 and the maximum nearby new call options added at 18,200 and followed by 18,300. However, 18,200 also got some new put option open interest, so 18,300 is the resistance to look out for. Then from the overall options open interest data, 18,000 and 17,800 got the maximum nearby put options, but 18,000 mark also got some call option open interest, and because of that 17,800 is the strong support to look out. Then coming to Bank Nifty, based on change in open interest, the maximum new call options were added at same 43,000 and followed by 43,500. Since 43,000 also got significant new put option open interest, so 43,500 is the immediate hurdle or resistance. Then based on overall open interest data, the nearby maximum put option is present at 42,500 and 42,000. Since 42,500 got some call options as well, thus it's an immediate support to look out. If it breaks, then 42,000 is the support to look out for today. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.